Okay, everybody, Tom Gentile here with Chris Johnson again for another week. We are halfway through the month of May. It's going to be Memorial Day before you know it, Chris.
Oh, just thought about that yesterday, actually.
Yeah, it's funny because I'm getting fitted for a new Peaky Blinders hat and a top coat. It was it was a charity auction, and part of the auction was I'm getting the same clothing that Tommy Shelby wears in Peaky Blinders, and then my wife and I are gonna go to the premiere when they release the premiere somewhere in merry old England.
Nice.
So
very cool.
My wife's gonna be yeah all the way up to that vaccine shot.
Yeah,
and she's gonna say no. We're just waiting. That's all. We're waiting. We're going to get the shot, but we're in no hurry. We're not. We'd rather let the folks who are who really want to get it ahead of us. But now I think it's pretty much our turn. How you doing?
Been pretty good. The market makes you smile and makes you frown the next minute this week.
That's kind of what it looks like, a smile and a frown. It was a smile at the beginning of the week. It started to frown at the end of the week. Why don't you give us some market details? Let's talk about the overall markets. I got a lot to talk about when it comes to cryptocurrency. So why don't you take the lead on this one?
Let's take it from the sentiment perspective first, because both of us watch sentiment a little bit, and we got a little bubbly as we headed into that May sell and May go away. Frankly, I thought that it was maybe going to buck the trend, but what I've noticed, and I think you've noticed this too, is anything high PE ratio is getting knocked down after earnings. Low PE ratio stocks, you're fine after earnings. That's the message for the market, Tom, is that this thing is overpriced. PE's got to come down a little bit. You're seeing selling in some of the risk-on sectors, IWM, IWC, even the NASDAQ 100, if you can call that a risk-on sector. But it's telling you that this market needs more of a break. And the VIX is the other thing. You look at the VIX striking out at 28 yesterday, telling us, or earlier this week, telling us that, hey, there's some fear out there. I don't think it's done. I think we got another couple surges in that coming, and maybe we finally get a real 10% correction here.
Maybe. I mean, I look at my account, and I didn't take. I'm down a little bit. But I didn't take the hit the market took, but a lot of that's because of the alternative way that I trade. I'm also I've hoarded up a lot of cash recently. So I'm waiting for things to go on sale so I can kind of grab a little bit here or there. I have to say, my best positions right now overall happen to be right now as I'm looking across my board, gold. Right now I'm holding a commanding lead on my long-term portfolio in GLD, and on that's my best position. My worst position this going into this week, Coinbase, and we'll talk about that in a moment because I'm going to get into cryptocurrency. But that shouldn't be any big shocker. Coinbase did have a nice comeback in the earlier in the week, but it gave a lot of that back up as we headed towards the end of the week. So that's, if I were to give you my best and worst positions in my long-term portfolio, that's it right there.
You know what? I'm still plain brown paper bag on some of my best. Concrete and steel has been working very well. You know that the infrastructure trade got a little shaken up this week. We saw Nancy Pelosi and Kevin McCarthy come out and say that both of them thought that everybody needed to reach across the aisle. But man, both of them also putting conditional statements in that. Kevin McCarthy, probably the biggest one, where he said no taxes, so that shook what has been working for, I think, everybody here, which is those infrastructure trades got shaken up pretty well this weekend. And it might be just a rinse, wash, repeat type of situation where I know I'm looking for opportunities to dip into a few of these. The other thing is the commodity trade this week getting shaken up, Tom.
Yeah, well, they needed to be. I mean, everything's been going straight up. People are going to start holding the folks at Home Depot and Lowe's. They're going to hold them for ransom for plywood. Because that's the big. The person that's taking it on the chin all the time is the poor cashiers that are at these places, because the contractors are rolling up with their wood supplies and they're complaining. And who are they complaining to? They're complaining to the person that's ringing them up. So
Yeah.
it was due for a pullback. And you look at the price of lumber; it's off the charts. Considering that it's not the trees that are the issue, it's getting the stuff converted
Supply
into
chain. Yep.
product, into building supplies.
So, do you have any still? And we've looked at a couple of companies, LPX being one of those you and I have mentioned a couple of times, Louisiana Pacific, and that even getting a little bit of a pullback here. Actually, let me do this as a two-sided question. You buy a dip on an LPX right now because the stock is down from 76 to 64.
Well, it's
And
funny you say that. So I mean, you and I mean, I don't look at the news the same way a lot of people do.
Mhm.
I think the news really is a back cursor to what technical analysis is. A true technician believes that the price of the stock is already built in before the news even comes out. So let's take a look at Louisiana Pacific, and the best way I can look at it is you got to go back to the beginning of the year. So the beginning of the year, there was a little bit of a baseline below 40. So we
Yep.
see the baseline, and then from there, what I'm doing is I'm watching this move that ran up. Maybe the only pullback I saw prior to what we've seen this week was one somewhere in the month of March. But what we can do is we can take a look at Fibonacci. And Fibonacci, these are retracement levels, can give us ideas on buys. Now, I can give you two of them right now. The longer term Fibonacci, when you go all the way back to the beginning of the year, the 38% pullback comes in right around $60,
Uh-huh.
$59.97 to be exact, based on the math that I do. Now, my Fibonacci charts are going to be a little different than everybody else's because I don't go absolute low to absolute high. I use closing prices. And
Right.
so if I use the closing prices back at the end of January, the closing low to the closing high that happened the day after its earnings report, which was just last week, we
Right.
get a read in there that we're looking at around $60 and $60 is a round number support too, so that's nice. Now, if
50
I
day
were to
too.
do one more look, and I'm going to look back the last 50 days, so keep 60 in mind. Go back the last 50 days, and you'll see that earlier this week, we did hit the 38% retracement on the 50-day move from low to high. That was actually hit yesterday. Well, it was hit middle of the week. And that was priced in at around 63. So somewhere between 60 and 63 is an area where there could potentially be a lot of technical buying.
You get that 50 day that comes in at $60 too.
Yeah.
That rising 50
So there's
day.
a lot of overlays that are going on around that 60 level. All right.
So let me throw another one at you because I get a lot of requests from people in the chat and the live streams about Tesla. And you
Mm.
mentioned Fibos, and Leonardo of Pisa, I think, was a genius, obviously. But Mr. Fibonacci's numbers, what do they say to you with Tesla at 580? Because I see on mine, I got a 38.2% at 588, which suggests the 200-day moving average should try to hold Tesla, but we're not seeing it.
Yeah, I'm not. I'm going to have to go against you on this one, Chris,
Let's
because
hear it.
if if you pull I pulled a 50-day chart,
Mm-hmm.
can't get anything. I mean, we're going 100 to 100. I
Right.
pull a 100-day chart, and the 100-day chart actually starts at the high at 900. So it
Yep.
goes high to low, which means that anything going up could be a seller's an area to sell in. We hit the 61.8% retracement, and this is a pullback. Considering the market goes down, it pulls back to a lower high. That
Right.
lower high hit back on 4/14, 1 month ago. And so since then, we've kind of been going straight down. I think that if we break those lows that happened back in March at around 563, and we're getting dangerously close to those, you hit those lows, I think we go lower. I think that we see 500, 450 to 500, which are round numbers, could be
Yeah,
the
I got
next
a
area for Tesla.
490.
Now, Tesla's kind of taking it on the chin because Musk did a back step. He backpedaled from, I mean, things had just gone from bad to worse since the Saturday Night Live episode, and I was going to get into it with crypto, but let's get into it now.
Let's hit it.
So
Go.
first was the Doge comment about it being a hustle. He didn't
Right.
say it, but he didn't not confirm it. He went, yeah, it's a hustle. When they said, so Doge is just a hustle, isn't it? He goes, yeah, it's a hustle. And I think he was reading a cue card. So I'm going to give him a pass on that.
Okay.
But earlier this week, when he came back and said, no, we're not going to be able to sell Tesla for Bitcoin, that hurt both Bitcoin and that also hurt Tesla. And that's why you saw those fresh lows that happened towards the end of this week.
So what happens with Mr. Musk and Tesla and Bitcoin now? And what, so I always love to hear your comments on the crypto side of this. How does that, first of all, because he's been one of those great cheerleaders.
Yeah, well, I think he owns crypto. Okay.
Oh yeah,
There's folks that have done studies on crypto wallets that, yeah, I mean, you can't take a crypto wallet. I mean, you can, but we can see crypto wallets and we see who bought, what's being bought, what's being sold, and we can only assume based on timing of tweets, for instance, if those are connected to the person that's doing the tweeting. There is a lot of cryptocurrency that is being bought and sold around the tweets of Elon Musk. But I kind of noticed that after this Saturday Night Live episode, he's gone either quiet or he's made some more some tweets and comments more toward the negative side of crypto. I wonder if he's not thinking about that SEC probe that happened years ago and is thinking, I better be careful about what I say, even though I may be the first, second, or third richest person in the world. What I say might make me backtrack along the rungs of wealth. So that could be part of what he's thinking about, is that, he's maybe become too much of the Doge dad, of the, a crypto cousin, if you will, in the world. So I think that's probably what's going on. I don't think it changes his holdings at all, but it is changing a tone in the world of cryptocurrency. So let me usher in and talk about three. I'm going to give you three test points on crypto right now. So, if you take a look at, and I'm just going to bring it up on my screen. If we take a look first, I look at number one, the market cap in crypto. So here's the market cap that's going on in crypto right now. When we look at Bitcoin dropped below $1 trillion market cap this week. It has not done that in months, all right, as we are now at around the $50,000 mark. That's where it seems to be staggering, give or take, depending on when you're watching this broadcast. So let's just go with 50,000. At $50,000 with the circulating supply out there, we are really right around the 930 billion mark in terms of market cap. Now take a look at Ethereum. Ethereum, where it's trading at right now, which is around the 3,900 mark, has a market cap of over 400 billion. These two cryptocurrencies used to be, for every one, if you wanted to trade in terms of market cap, for every one Bitcoin, you needed 10 Ethereum months ago. Now it's almost 1 to 2. That's how fast Ethereum has come up in terms of its market cap. Its market cap is a little bit less than half of Bitcoin. It's absolutely amazing. A week ago, maybe 2 weeks ago, it was 1 to 5. That's how fast this thing's coming back. So if you take a look at Bitcoin as a price, we were at 64,000 a couple weeks ago. And so, I know we can't see prices on our podcast, because our podcast, the only thing you're seeing is my face and yours. So I'm going to throw audibles out here. So if we were to look at Bitcoin, and those of you that are home gaming on this, BTC is what we're looking at. 63,558 is an important number to me, because that's a Fibonacci close that I'm looking at that happened back in the middle about a month ago. Since then, we've dropped down to around the 47,000 mark. We ran back up, but we didn't quite get anywhere near 60,000. We pulled back down. We're double bottoming right now around 47. That's a very interesting number to me, because it represents two things. Number one, and I say 47 because that's an interesting number. Number one, we double bottom. Number two, that's a Fibonacci 50% retracement level off the lows that happened back in January when we were down in the 30,000 range. All right, so that's my test right there. If we go below 47,000, we're heading low 40s. Ethereum. Now, Ethereum is absolutely the strongest currency in the wagon right now. When you look at ETH, if you look at Ether, you can see that Ether is not far off of where its all-time highs were, which, by the way, were earlier this week. And so that's important to know too. I mean, we just had all-time highs earlier this week. So you go back and look and say, all right, well, what do the numbers look like? Well, the numbers shake out like this. My low that starts the Fibonacci is at 1,000. My high that ends Fibonacci was just early this week at about 4,178, just shy of 42. We're not even anywhere near the 38% retracement. I can't even give you a Fibonacci. But if I were to say that Ethereum was going to be on the, is going to be sold, because it has gone very far, very fast, there could be some pullbacks that are happening because all of a sudden now everybody's talking about Ethereum. That means a lot of people own it. We probably need to flush some of those people out. The flushing would take us all the way down to just below 3,000. So 3,000 is an area that I like in Ethereum. If I were to look to look for a buying opportunity. And finally, let's talk about Doge. I don't own Doge. I've said I will never own Doge. I said that last week. I've said that on regular podcasts. And now it seems I might be right, because Doge last Saturday, as we went into Saturday Night Live, hosted by Elon Musk, Doge was trading. I mean, it went as high as the 70s. And I got to give props to my son, who sold half his Doge position at 70 or 71 cents. He almost top ticked that thing, and good for him, because I didn't think he was going to do it. And then he told me he did it. I mean, the millennials, the Gen Ys, the Gen Z group, really the Gen Ys, they're all over these, the Reddit community, coin, and coins that are really just, they don't even have a value. They don't do anything to the network. And that's really right. Doge. But Doge has captured the attention of a lot of folks, and it was the most volatile coin over the last couple of weeks. So why not take advantage of it? Look at where it is now. We hit a 50% retracement level earlier this week at just below 35 cents. So 35 is another number that I think is a test for Doge. So my 3 test points are, if I summarize them again: Bitcoin, 47,000, Ethereum, 3,000, Doge, 35 cents.
Hey, let me give you a tip of the cap, a little golf clap that you just gave your son too, because 2 weeks ago you were talking about Ethereum and that differential between that and Bitcoin, and saying that, hey, it's going to be a 4-to-1 run for Ethereum versus Bitcoin. And you were well on your way to hitting that. And that's not me just glad hand. That was a great call.
Thank you. And as an investor, I have no reason to sell any of this. I don't. Okay. It's not going to change my life at all. If I lost every dollar in all my cryptocurrencies, won't change my life. All right. And I've got a fair amount of money in cryptocurrency. Now, I don't think cryptocurrency is going to zero, which is why I'm holding on to it. But, to me, I think that this is just the beginnings of a much bigger picture that is 5 years, maybe even farther out. There are some yahoos out there that they're saying Bitcoin's going to go to 5 million. Ethereum's going to go to 100,000. I think that that's clickbait more than anything else. But I also think that the levels that I think that are going to happen later, years ahead, are not that far, are not that crazy. I've got 100,000 on Bitcoin, and I've got a $500,000 target on Bitcoin, but that's 9 years from now. That's 2030. And then I look at Ethereum and I think, you know what? I would never put $100,000 number on Ethereum, but I do have a $10,000 number on Ethereum. And I had that at the beginning of the year, and look at what's happened to it. I almost think it's going to happen, maybe not years ahead, but that could happen sooner than, that could happen by the end of this year, the way Ethereum's going. Of course, Ethereum could turn around and run back down too. But I'm an investor in the technology. I'm an investor in the entire space. And I do think that, I have to see another zero at the end of my portfolio of cryptocurrency before I start thinking about taking some investing crypto off the table.
So let's flip it around and look at a derivative there. A lot of people asking about Riot Blockchain, Marathon, etc. So Bitcoin now digging a little bit of a hole, and you've got these miners that I thought, might be helped by Coinbase. Coinbase has, I mean, for all intents and purposes, been a little bit of a top caller on not only Bitcoin, but also on some of the miners. Where do you see Riot? What's your call on Riot Blockchain and Marathon, just to pull two out?
Well, you Riot Blockchain. I don't have a call on the second one, but I can tell you this: Riot Blockchain is completely. We're going back to 10.
Which
I was short at 60. You remember this?
Yep.
And I had 40 as a target, and we hit 40, and then we bounced back, and we created. If for those of you watching this particular podcast, go bring up a chart of Riot Blockchain, and I want you to look at the lower highs that really started when it was above 77, almost 78, and then look at the lower lows that happened. Really starting at around the $17 mark, but you'll see a triangle formation that's happened on the day chart. Then look at the breakout of that formation that actually happened back around the end of April. You might have had to suffer through about maybe 10 points of drawback if you were short, but
Right.
You were well rewarded in the past 2 weeks as this thing broke down and just continues to make new lows. I'm telling you, it looks like that 17, you've got 17 half, you've got 15, and you've got 10 as the next areas of support for this thing. The only way this turns around is if Bitcoin goes and makes new all-time highs. And it will. I believe Bitcoin will make new all-time highs. But people are seeing Riot Blockchain and they're just saying to themselves, anyone that was long this has got to be thinking, what was I thinking? Because Bitcoin is pulled back. I mean, look at this. Bitcoin pulled back from 63,000, let's call it 50, right? So it's pulled back about 25, depending on how you do your math, 25 to 30% off its all-time highs. Riot Blockchain has pulled back from $80 down to the low 20s. I mean, we're talking about a 70% off sale going on over at Riot Blockchain compared to a 30% off sale going on with the actual thing that they mine, Bitcoin.
Yeah. How much does mid-April, remember Citron came out? After they said in January or February they were no longer going to short anything because of the GameStop, they just got raked over the coals. They came out and on the 13th of April said Riot Blockchain's worth $2 a share. And I think everybody kind of wagged their finger and said, hey, you guys said you weren't going to say anything negative about, and now you're coming out short. Those guys are looking like they nailed it.
I mean,
too.
the winners on Riot Blockchain were the put spread buyers, the ones that bought higher strike puts and sold lower strike puts because the volatility was really too high. You could have sold naked call options if you're an option trader, but boy, you were taking a huge risk if you did that. Yep. But buying puts was really not the best choice because the volatility was just, it's high. Even when it's low, it's high. We saw IV up in the high 200s back when this thing was $78. And then when it came down, the lowest that it got was 120 on the IV. I mean, consider that the VIX trades at levels of 20 to 25 to possibly even 30 on its high side. Now, look at what the low of Riot Blockchain is right now. It's 120. It's still, we're still 400 to 500% higher than the VIX. So you can use that as comparable terms. So the put spreaders were the ones that really did the right trade. Bet if they were betting bearish on Riot Blockchain.
So let me pick your brain on an educational question. We don't go into education that much because it's hard to display, but I think we can talk about this one. Is there a point where you always default to using a spread versus going out? And whether it's the options being expensive, like you just described with Riot Blockchain, or maybe it's a Tesla where the stock is just through the roof, or Chipotle, something, and you want to short it, but you don't want to put out that premium. Do you have a guideline? Because I get asked about this by all kinds of people, and your name comes up in some of the chats that I'm talking about. Is there a guideline that you follow to say, you know what, this is where I'm just going to default to doing a spread?
Well, yeah. Nothing's always 100% in concrete when it comes to options or even the stock market. But what I'll do is I'll take a look at, and to answer your question, Chris, it's all of the above. So what I do is I look at a minimum 6 months of the option charts. And if the option charts are high, then that means that tells me that implied volatility is high. that basically means option prices, that time value is high. So I'll spread off that time value. But
Right.
just like you said, if it's an Amazon, if it's a Google, for instance, those stock prices are high, and it doesn't matter whether options premium is high or low, it's still going to be
Right.
expensive. You're talking about a $30, $40, $50 put, and I'm not going to spend $5,000 on a put on one put contract when I could spend $500 spreading that $5,000 put option off on selling something for $4,500, and then I'll lower my cost, lower my risk, lower my break even, and really lower your stress level is really the best thing you could call it. So
Right.
yeah, so as a beginner, if you're a beginner looking at this podcast, you're beginning into option trading. I don't buy calls or puts when they exceed what I believe to be an expensive amount, and maybe that amount is $500 a contract for you, or maybe that amount's $1,000 a contract for you.
Mm-hmm.
And so that goes to show for all those expensive ones, and there's a lot of them out there. Like you said, Chipotle. Look at even Square. I mean, which is
Expedia.
not a
Yeah.
Square's not a $1,500 stock, but the thing's still $300. And so you look at that and you got to say to yourself, all right, well, if it's $300, the option could be 20 points that I'm looking at. Why not hedge that off with something and lower my cost of my risk? The other is that if we're coming up upon an earnings report, for instance, you don't ever want to be buying calls or buying puts right before an earnings report, because that time premium is going to be very high. You're better off spreading and taking that 1-to-1 risk
Right.
return figure. That's just a guideline that I use.
All good rules to follow. Boy, I pulled up Square right now and looking at 200. Little make or break for Square, it looks like,
Yeah,
at that level.
exactly.
Quadruple bottom, 200-day moving average in play, 50-day rolls over.
We're
Fintech,
seeing a lot of
and
that right now.
we are.
We're
I
really
was about
seeing
to
a lot of that right now. And then, as we end the podcast, is there anything that's on your buy list right now, or maybe even on your short list that you're looking at
You know
going
what? I
forward?
am finding that there is more starting to pile up on the short list. I shouldn't say pile up. A lot of biotechnology, which has just been, there are a few stragglers that AbbVie that stand out that you can maybe pick alongside on. Biotechnology and large cap technology are right now, I'm getting a lot more of the signals to hedge and short some of these stocks. And as I pull up, and it's just happenstance, and we look at Square, this is the reason. Quadruple bottoms, testing long-term 200-day moving averages and volume. Remember, we had that buyer's strike in April where nobody was buying. And now all of a sudden, instead of a buyer's strike, it really has turned into sellers coming in and owning the market. That's
Yeah.
a danger sign for some of these areas of the market that are crowded. Financials, you're still getting a third of the volume on a daily basis at the S&P 500 level that's going into financials. And why not? Because you've got interest rates that are still going higher, especially in the regionals. I'm trying to find some opportunities there, Tom, as well as some of these infrastructure trades still. Clean energy, man, you know how much I loved clean energy at the beginning of the year and did really well with it. Holy
Yeah.
cow, it's killing me. It's
Well,
like
you
every
don't have to
once in
look
a
any
while.
farther than Tesla for that one.
Well,
But
yeah,
you're right.
I have to leave my desk because I want to buy them so badly. But when I look at the volume and the trends and everything that's happening, I can't actually push the button. And I really want to. I think these are long-term investment buys, but man, to short-term trade anything that is an alternative energy or EV, electric vehicle stock, I think you're looking to lose fingers or at least nick them on a falling knife here. How about you? What's standing out on your screen? Anything?
I mean, I'm still a long-term fan of gold. I think gold is the quiet buy right now.
Mm-hmm.
GLD. It actually had a really good week despite the markets, and maybe gold's coming off the risk-on track, the train track it's been on for the last several months, where it moves with the stock market. It's actually, I mean, maybe people are looking at it more like a commodity, and the fact that it did not run up with commodities, perhaps that's the area. So GLD for me.
How about any miners that you like when you talk about gold? Is it just sticking with GLD, or do you like any to get down to Freeport or anybody like that in the miners area?
GOLD is a
Mm-hmm.
stock symbol of one that was moving around a lot with gold, but had a higher alpha.
Right.
So that's one that if you wanted a little more racing fuel in with your gold, with your
Slingshotting games.
GLD, GOLD is the
Fair. Yeah.
symbol. Yeah. Yep.
All right.
Well, Chris, thank you very much. Another great weekend that I have planned. How about you?
I got a great weekend. Little golf, outdoor, working in the yard. Spring is here. We got the cicadas coming though. You don't have to deal with those where you are. Cicadas are going to be here
But
next
we've
week.
got
So
we finally are seeing the hot, muggy, 90-degree weather that Florida is so famous for. It actually came in late this year, but it's coming. So we're going to be water sporting it this weekend for sure.
nice. Sounds great.
All right. Well, hey, you have a great weekend. You folks at home, you do the same. We'll see you again, same time next week for another podcast. Till then, take care. Bye now.
See you, Tom.